Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. So what were you doing with your computer over there?
Well, I was trying to start the timer because I forgot, but it's too late now.
Okay, mine's running, not a problem.
Okay.
So, again, we are on our never-ending crusade to defund the IRS.
Because
taxpayers matter.
Absolutely.
And there is only one way to defund the IRS.
That's
and
right.
Let me give you a hint. It's not go to a flat tax.
Starts with fair and ends with tax, right?
There you go.
Yeah. Okay.
So if you hear people talking fair tax and flat tax in the same sentence as if it's the same thing, no, not even close. That's the difference between night and day.
Yeah. Oh, absolutely.
The flat tax is basically the same system we've got.
Yeah,
You're
actually,
just going to change the brackets a little bit. You're not going to reform the system. And so with the flat tax, you still have the IRS, you still have tax returns, you still have withholding, you still have all the nasty things that come with an income tax because it is an income tax.
and think of it as job security for the lobbyists. The lobbyists love the idea of a flat tax because they get to start all over again. Job security, money for everybody.
Yep, we look at Congress.gov every other program here on FAIRtax Power Radio and see what kind of stuff the lobbyists are encouraging the Congress critters to put in. It's funny, you can look at the proposals in the tax code changes and pretty well tell which lobby is behind each one.
Yeah, that's true.
So we'll do that. And also, several weeks ago, we did a show on just the incredible amount of money, the influence that lobbyists have. The numbers are staggering.
Yeah.
The kind of money they throw around and the number of people number of lobbyists that are lobbying stuff that seems to be totally outside the realm of the interest of their business.
Well, and just a quick aside, that episode we concentrated on the website opensecrets.org, and it said that in 2019 something like $3.5 billion was used for lobbying efforts. Then after that, I heard somewhere, and I can't remember where, they say, well, that's what's reported. It could be twice that much. Unbelievable.
What they admit to.
Yeah. So, anyways.
Mercy. All right, you got a neat little grassroots corner here.
Yeah,
this time.
yeah. Jim Bennett is the grassroots coordinator for the AFFT, the Americans for Fair Taxation, and you can contact Jim if you have something of a grassroots nature or you want to ask him something. It's jim.bennett at fairtax.org. Jim.Bennett at fairtax.org. Okay. Making the Fair Tax Stick, Part 5. Now, we've been through this before. He talked about this book, Made to Stick, Why Some Ideas Take Hold and Others Come Unstuck. And the authors use the word success, and they spell out, the S is for simplicity, the U is for unexpected, and so forth. And through the book, and Jim has gone through these one at a time, he's talked about each particular concept of making your idea stick. And this one is E, emotional. And all it is, the first principle, let me back up a little bit. First principle is simplicity, which is really finding your message core idea, expressing it concisely. And then they go through unexpected, all right, concrete, credible, and now we have the E for emotional, all right? In other words, how can our message get to people who care about the fair tax? Or how can our message get to people who care about taxes altogether?
How do you get your message to make people care about
that's
the
right.
fair tax?
So I'm not going to go through the rest of it because you can read it. If you go to fairtax.org and give them your contact information, you will not get spam because you signed up with them. They never sell or share your information. But then you'll get these weekly reports from Jim Bennett, good ideas on how we can promote the fair tax. You'll get a heads up from Steve Hayes, the chairman's report, and you'll get a short email from the FAIRtax Guys about our weekly show. So fairtax.org, sign up and give them your information, and you too can help out.
So, all right. You found a neat little article here. You know, a lot of changes have happened because of this COVID pandemic.
Yeah.
And one of the things, and Steve touched on this in one of his chairman's reports, one of the things is a lot of more companies are finding that their employees don't have to come into the office to work.
Yeah,
We've
absolutely.
got a lot of people working from home. In fact, the last couple of times we've talked to our accountant friend Jade Wiley, he's been working from home.
That's right. Yep. And my oldest boy, he's from working with home. He works at, those of you up in New England will know, he works at RPI, and he's been working from home, and it's working out quite nicely.
Indeed. Well, I wonder how the tax law is going to apply to that, because the Congress critters try to make the tax law apply to everything.
Yeah, so this one is entitled, this is from Fox Business, dated September 11th of this year. Will tax laws change as remote work becomes more popular? Yeah, now we talked about in last week's episode, we talked about some of the proposals that were in congress.gov to help teachers and other people, you know, claim deductions for expenses at home. We already have that. There's already a section in there for employee business expenses. So this probably relates to that. Experts caution the filing process may not be simplified in the near future. Remote work has become more commonplace as a result of the coronavirus pandemic, but experts caution against expecting any major changes to the tax laws that would account for these trends. Well, I think that's the wrong question. They're asking the wrong question. They should be asking, why do we have a tax code that cannot keep up with American society? These things are changing quickly, all right? Now, if we had the fair tax right now and you paid your taxes by going to the store and the tax would be added onto the product or service that you purchase, would working at home even be an issue?
It would not make any difference.
No,
whether you work at home or whether you work in the office or whether you're on the road traveling or whatever. However you make your money, how much money you make, where you get it from, doesn't make any difference with a fair tax. The tax code would not have to address any of that stuff. The Congress critter could not manipulate any of that stuff if everybody paid their federal taxes at the cash register when they buy things. And that's what we're talking about, folks, here with a fair tax.
So our challenge is to get the people in the news cycle to start talking about what the real question is. All right? Not this phony baloney stuff about changing the tax code that is already overwhelming individuals and businesses across the country. The tax code is hopelessly complicated. We need to pull it out by the roots, as Bob always said, and get rid of it, throw it on the trash heap of history, and just go with the fair tax.
Yes, and we'll have another whole new list of stuff from congress.gov next week on FAIRtax Power Radio, and I guarantee, I have no clue what it's going to be because we haven't gotten there yet, but I can guarantee you it's going to be kind of crazy and off the wall.
Yeah.
Now, speaking of crazy and off the wall.
Oh, yeah. Yeah. So we decided, all right, we need, we've done this from time to time before, you know, some crazy proposals or crazy tax deductions because this tax code, I mean, the tax code is huge. And then you got the IRS interpreting some of the things that people submit. Well, we'll allow this, we won't allow that. Well, why? You know, and then sometimes it goes to the tax courts.
Well, originally we were going to go through the tax code and just find some crazy stuff that's in there. But we ran across this article on a website called Wisebread, W-I-S-E-B-R-E-A-D, wisebread.com. 20 amazing, outrageous, and just plain weird tax deductions. Now, these were attempts by different taxpayers to take advantage of the tax law, and some of them were accepted and some of them weren't. But we'll go through some of these things, both the ones that they got away with and ones that were allowed and that were disallowed. But the question is, why do we have a tax system that encourages people to do crazy things like this?
And believe me, by the time we go through this, you're going to be scratching your head and saying, agreeing with us, why are we tolerating this crazy tax code? By the way, this article is from April of 2007, so it's a few years old, but it's appropriate.
But it's just as entertaining today as it was when it was written. And the first one says, says free beer.
Yeah.
Yes.
Hey, what's not the? I don't care for beer.
I don't either. I don't drink it either. But it's interesting.
I'm just not a beer guy.
Most people do. We're definitely in the minority on that deal. But this is strange but true. A gas station owner. Remember back when gas stations would give trading stamps and they would compete with each other? Well, a gas station owner decided to give his customers free beer instead of trading stamps. And then the tax court says, yep, that's a legitimate business expense. It's tax deductible. So he got to deduct giving away free beer as a business expense to his clients. And people would come in and fill up at his gas station.
Yeah, and you know, I just can't believe, aside from the tax code, a gas station giving away alcoholic beverages, all right, to people who drive off. You know,
well, remember, this was back when they were doing trading stamps. It's been a while, but that's
anyways,
which makes the next entry even a bit stranger.
Yeah. All right, free whiskey. No,
can't do that. Okay.
Ironic. A cunning fella thought a case or two of whiskey could make nice client gifts, and thus tried to deduct them on his annual tax return. The category he chose to use was client entertainment. However, not only was it not allowed, it was a gift that violated state laws. Ooh.
Oops.
But that doesn't make any sense. I mean, if a gas station owner could give away free beers to his clients, why can't this other fella give away free booze to his clients? That just doesn't make any sense. Well, and it brings up the...
I guess it's the state laws and other stuff. I guess the whiskey and the hard stuff is regulated a bit more harshly than the beer. But
to me, it's the IRS being arbitrary and capricious and not really understanding the tax code.
This next one, they list about 20 things here. This next one has to be one of my favorite ones.
This is amazing.
Can you deduct the cost of hiring an arsonist? This is an actual case. A man with a failing furniture business decided to hire someone to burn it down.
Oh, great.
The store owner's plan was not only to collect the $500,000 in insurance money, he also wanted to deduct the $10,000 in expense it cost him to hire an arsonist.
He was denied.
That's a pretty expensive arsonist. I mean, wouldn't you think that? But the
thing is, he owned up to it.
Yeah, I'm not so sure that long before the police were looking carefully at his tax return because he tried to claim that as a deduction. Not a smart thing. No.
I mean, that's crazy. So it begs another question. Does the deductibility of certain items on the tax code encourage people to break the law by hiring an arsonist to burn his business down and illegally defraud the insurance company?
Yeah, insurance fraud, and they denied. Yeah, that guy's in a lot of trouble.
No, that's for sure.
But this is the kind of crazy stuff that our tax code encourages. Even though he didn't get away, I still want to know what arsonist would cost $10,000. I would think you could find somebody to do it a little cheaper than that.
Okay, do I get the next one?
Oh, help yourself.
Okay.
Throat tickle again.
We actually have talked about this one in previous ones, but it apparently is a popular one because it keeps coming up whenever we do a search like this. Fake boobs. Okay, this one is infamous. A stripper going by the name of Chesty Love used her hard-earned savings to boost the size of her boobs to an eye-popping size of 56 double F. Okay,
man, how could you carry that around?
She figured she would get more tips. TIPS. Okay,
yeah, spell that out.
Yeah, and the write-off was allowed, being considered a stage prop and essential to her act. So breast enhancement for a stripper, that's allowed in the IRS code.
So what God gave her wasn't enough. She had to enhance it, and the IRS says, fine, that's okay.
Unbelievable.
Which means you can deduct that, which means the rest of us actually had to pay for that, right?
Now, yeah, exactly. Yeah, we did. Okay.
Okay.
The next one?
Can you deduct prostitution expenses? The answer to that is no. Well, maybe in Amsterdam or at the Bunny Ranch in Nevada, but you cannot deduct expenses of illegal professions. So if you try to deduct 4,000 condoms or push-up bras, no good if you put down prostitute as your career. It is amazing. Similarly, drug dealers cannot deduct the cost of baggies or soil for growing their marijuana plants.
Yeah.
But the fact that we've got a tax code that even lets people think of this,
yeah,
and try it, is insane. Can you imagine doing that with a sales tax? If your federal taxes are paid at the cash register when you buy things, as is the case with the fair tax, you will not have people trying to deduct these crazy expenses.
No,
there are no deductions to deal with.
No, there aren't. And even though they're making their money illegally, and you know, a lot of people that make money under the table, they don't even report it. I'm not sure why this person attempted to do that, but they will pay taxes when they go to the store and purchase things. Mm-hmm. They will not avoid the tax because they can't avoid it when they go to the store. So
yeah, evasion's a big problem. We've dealt with that.
Huge
Wally
problem.
touched on that in his last webinar. It's just amazing.
Yeah.
The length to which people will go to try to evade taxes. Of course, there's a difference. There's an illegal evasion, mm-hmm. and then there's legal avoidance.
That's right.
I.e., legal avoidance is trying to take advantage of the loopholes and stuff that's written into the tax code.
Yep.
And we're looking at some rather ingenious attempts to do that, and some of them worked and some of them didn't.
Yeah.
This guy that had a junkyard got away with deducting the cost of cat food.
Makes sense.
Yeah.
Okay.
Sure, why not? Cat food is part of your business. Well,
junkyard owners set out bowls of pet food nightly to attract wild cats. The wild cats also took care of the nasty snake and rat problem, making the junkyard safer for customers and providing a useful business service. Yep. It was allowed. The cat food, the cost of the cat food was allowed as a legal business expense. That one I can kind of understand.
Yeah, but you can do cats, but you can't do racehorses.
Yeah, yeah.
Now we live here in Florida, kind of right in the heart of racehorse country down here.
Yeah.
There are some beautiful horse farms here where we live. But you can see how this would be a business expense for some people. But if you just go out, buy your own prize-winning horse, name it after yourself, and then take it out to client. I could see naming one Richard Petty or Dale Earnhardt or Mario Andretti, you know, something that would go fast.
Yeah.
And then you take your clients out to see your own horse run. You cannot deduct that as a business expense. It's a personal expense. But heck, if you can afford a racehorse in stables, why are you worried about that kind of deduction in the first place?
Yeah, if you owned a farm, you know, a horse farm, well, certainly if you buy a racehorse or whatever, that is part of the farm. Yeah, that's going to cost you, you know, just like you'll make money on stabling other people's horses, okay? But this guy didn't have a business that involved racehorses, so the IRS said, no, that has nothing to do with your business. Okay.
How about going on an African safari?
This one I can't believe. This is unbelievable to me. I just can't. The IRS considers a business trip ordinary and business expense.
Yeah.
All right.
Steve did a whole chairman's report on ordinary and necessary and how hard it is to define that.
Yeah. Ordinary and necessary. You can take it as a deduction, okay? For owners of a dairy farm, this included a wonderful African safari because many of the activities on the trip were focused on wild animals. Wait a minute. Dairy farm? Wild animals in Africa? What's the connection? I don't get this. And yet, the IRS allowed that.
Oh, well, would they allow you to go see adult shows in Vegas? Would that count as viewing wildlife?
Let me guess.
The answer to that is probably no. No, it says no, you can't do that.
Okay.
So the cost of moving the family pet, whether you've got a Great Dane or a great white shark, your pet is considered a personal effect, and that's great news for you because when it comes to expenses relating to any kind of move associated with a job, the tax man says, yeah, but I suspect hiring a Hummer limo to move your gerbil across the state line might not, that must be there. But again, we're looking at this article from wisebread.com. This is really cool.
Yep. And now, trip to Bermuda. Yes, not just yes, but heck yes. Okay.
They got hit with 2 hurricanes this season, didn't they? You want to go?
Yeah. Any business convention, this is something I didn't know. Any business convention held in Bermuda can be written off without even showing there was a special reason to hold your business meeting in paradise. So, of course, You're going to have to shell out some good shekels there if you're going to have a business meeting in Bermuda. But anyways, but it's all deductible, okay? And that's not the only place. Barbados, Costa Rica, Dominica, Dominican Republic, Grenada, Guyana, Honduras, Jamaica, St. Lucia, Trinidad, Tobago, and Canada.
Mexico as well.
Yeah, all U.S. possessions fall into the special tax treatment. So if you have a business meeting in one of these places, it's automatically deductible.
Wow.
Yeah. We never did that in our business, did we?
Yeah.
No.
I'd like to see you drive your truck to Bermuda.
That would be a trick.
You'd have to load that sucker on a barge and float it over there. But you know, this is an interesting one. If you're a regular Joe, body oil. Now, I'm not talking about what is naturally secreted. I'm talking about what you get in the bottle. You know, it's a once in a blue moon splurge. Now, maybe something to spice up an evening with your partner, but certainly it's not a write-off. Okay. Well, however, if you're a pro bodybuilder and you need gallons of body oil to make your muscles glisten for the TV cameras, then that is a genuine tax write-off. I guess that goes back up there with the breast enhancements.
Yeah.
Just don't turn up at a client meeting covered in oil wearing nothing but a thong and a smile. It will not be considered ordinary and necessary. So that's no fair. His is deductible, and of course, not that I use it.
Yeah,
I'm too old for that. But
no.
Anyway, again, this is the crazy stuff that our tax code allows, and in some case disallows. How about the Super Bowl trip?
Okay, I'd like to put this one in the nice try category. Someone decided to take clients and their spouses to the Super Bowl, but just could not prove that the shindig was in any way related to business. But if they can take them to Bermuda and count it as a deductible business
put the Super Bowl in Bermuda.
Yeah. We'll have to get that, see if we can arrange that. And even if it was, it's an extravagant expense for a meeting. Wait a minute, isn't going to Bermuda for a meeting an extravagant expense? See, this doesn't make sense. This falls into the area of arbitrary and capricious, all right? I don't know where the IRS has this, but it just doesn't make any sense, okay?
Oh, mercy. We got to move along. Our time's getting away from us.
Okay.
This one is, as a pilot, this is something that's interesting to me. A private airplane can be deductible. A couple with a rental condo that was 7 hours away didn't particularly like the idea of driving up to those 7 hours to go check on it, and they didn't want to be stuck to the schedule of the only daily flight available, so they did what you or I would do. They bought themselves a private airplane, not one of these little Cessnas. These guys bought a business jet.
Yeah. And
they were allowed to deduct all the expenses. Now, I guarantee you that there are some pretty heavy expenses related to business jets.
Oh,
and so
the fuel.
They bought their own, and the insurance and what it would cost to tie it down and all that stuff. They were allowed to deduct all the expenses relating to the condo, including the high cost of fuel. That must have been some deduction that they got.
Yeah, you know, it was amazing that you've got this rental condo, you know, a 7-hour drive by car. What do they get for renting that condo if they can afford to go out and buy a jet?
I don't know. We got about 5 minutes left here. We'll have to pick and choose some of the remaining ones.
Sure.
Go ahead, do the mink coat if you want to.
Yeah, claiming that a mink coat was a conversation piece when visiting clients with his wife, a man tried to deduct the garment. He was denied. Nope. No, you can't buy a mink coat for your wife and claim it has something to do with your business. This I can understand, all right? That's really stretching it. All right, but then
let me skip down to this one: a nuclear fallout shelter. When I was growing up, that was a big deal. Everybody thought they had to have a bomb shelter in their house. Way back in the days of the Cold War and the threat of a nuclear meltdown, one clever chap built a nuclear fallout shelter on his property, and then decided to list it as preventive medicine. The IRS gave a big thumbs down to that one, but
preventive medicine.
Preventive medicine. If I have built a fallout shelter,
you got to give them credit for creativity.
Yeah, I guess you do. So that's what the tax code encourages this kind of creativity.
So, all right, the last two. Let's do dancing lessons in number 20.
Hang on for the last one. You can do the dancing lessons.
Okay, all right. Dancing with the Stars may be popular, but it's not going down well with the IRS as a subject of deduction. You cannot take dancing as a deduction for medical expenses, and the following reasons are outlawed: dancing to relieve varicose veins, dancing to cure arthritis, and finally dancing to alleviate nervous disorders. They're not allowed.
But they are trying to make diapers an eligible medical expense. We looked at that the other day.
And we still don't know if they're baby diapers or adult diapers for some of the people who have been in Congress for too long.
Last one, sperm donation is a loss. It's one thing to try to make a little extra cash as a sperm donor. It's quite another to try and claim a depletion loss on the aforementioned donation. So unless you're an oil well, that kind of depletion is really not going to make much of an impact.
I can kind of see the analogy there, but no. Yeah, oil well people can take a depletion allowance because as they suck the oil out of the ground when the well runs dry, that's it, they're done.
Okay, again, this all came from an article published on wisebread.com. We had to skip a few of them for time, but I would suggest you go check this out in detail. But that is the kind of craziness that is the tax code, and that is the kind of craziness that goes away if we replace it with a fair tax.
Yeah, and some of those really are crazy.
Yes,
so
they are.
Our call to action, okay, what you can do to help us when you have a few extra moments, okay? Join the AFFT, Americans for Fair Taxation. Go to fairtax.org, give them your contact information. You won't get spam because you sign up with them, because they never share or sell your information. But it's important. It's a national group, and as a national group, they actually have expenses of about $10,000 a month. So they need your help. They really do. And if you really want to help them, go to the 1040 Club, fairtax.org/1040, and you commit to sending them $10.40 a month. Those recurring donations are very important for them. So there's something simple you can do that won't take a lot of time, but it will take a little bit of your cash.
Yeah, and here's something that you can do that will not cost you a dime, but it will take you a little bit of time as well. That's to use the contact function at whitehouse.gov. Send a message. We played the video a couple of weeks ago here on FAIRtax Power Radio where the president actually mentioned the fair tax by name. He said we need to simplify the tax code, mentioned the fair tax as one of the alternatives or one of the options for doing that. Of course, he mentioned the flat tax right with it, so you need to go set him straight on the difference between the fair tax and the flat tax, but encourage the president to get behind the fair tax.
Yeah, that's a really simple way, and it doesn't take much time, okay? Okay, let's see. We have a new FAIRtax store. It's just fairtaxstore.org, fairtaxstore.org, and you can order hats and shirts and pens and campaign buttons and palm cards and so forth. All right, lots of good stuff there that you can show off your support for the fair tax.
All right, and be sure to share these videos with your family and friends. We're on Facebook and Parler and a bunch of other different places. And that's going to wrap this edition up of FAIRtax Power Radio. Thank you so much for watching and listening. I'm Bob Paxton.
And I'm Ron Malero.
FAIRtax Guys reminding you the fair tax is America's only truly fair tax. And once you understand it,
you'll demand it. Thank you.
So, how much will I bring home?
Go ahead.
How much do you make? We'll just say 40,000, okay? Keep it simple, throw out the deductions, all that stuff. So, you got your 40K, right? Now the first 8,000 is going to be taxed at 10%. The 8 to 33,000 is going to be taxed at 15%. And the 33 to 40, of course, is 25%. So that brings your total to $6,345.
Okay, so the average is what?
16%. Okay, and then on top of that, you got Medicare, which is 1.5%, and then of course your Social Security, which is 6.2%. So actually, your new total is $9,405.
Which is
23.65%. You're getting it. You're getting it. Don't even get me started on what the boss has to pay. He's got to pay a portion of your taxes as well, so you don't have to.
Right. And you?
Oh, you'd bring home every penny.